Welcome back, everyone, to another episode on Living Your Greatness. And I am excited to welcome back David Morgan from the Morgan Report. David, it's been a little bit of time. How have you been?
I've been good. It's hard not to be good when silver's blasted from 28 or something all the way up to 60 in about a year's time. It's basically doubled. This is the silver market. It'll surprise almost everyone, including yours truly. But being in this market and other markets, of course, but focusing on the silver market, once it goes, it can really go. And, how high is high, and that's all to be determined. But it's been very interesting. Just a side note, being very personal. I got an engine light on one of the vehicles, so I took it into my very trusted mechanic and scheduled an appointment to have him check it out. And his son was there, and I says, "What are you doing very much this, now?" I go, "Oh yeah, I'm still working." He goes, "Well, silver's $60. Like, now I can retire," which I probably could. But I don't know why he gave me that story, but it made me laugh, because he's, a younger guy and he's aware of what the silver price is.
Yeah, well, no, I'm happy that you actually shared that story, David, because it's important for all of us to remember how much, all these metals are kind of critical in our lifestyle as well. The fact that they're going up says a lot about other things that are going on in the world, especially in the financial world. And, there's not always good from that, right? Also some not so good. So that's actually what I kind of want to unpack next is, people are excited that it's, gone over $50 and it's made new highs. Some investors like myself, where when I was interviewing you 5 years ago, silver was trading at $18 and almost on defense. We're almost like, okay, what's going on? Is it actually going higher? Is it actually like the time? So I kind of want to start off with unpacking, do you think this is a short-term kind of move, or do you actually see it going to triple digits soon?
Yeah, that's a great question. The honest answer is I don't know. I do think it will go to triple digits. I put that in writing in the early 2000s in my first book, Get the Skinny on Silver Investing. And what's changed and what has come, recent times is what many of us have said for a very long time. And that is we will not really see a free and fair price discovery until the silver supply is so tight that the physical demand takes over the paper paradigm. And that's, to the best of my ability, knowledge, and, not just circumstantial, but actual evidence is proving. And a lot of people kind of thought it was the silver retail, which can have an effect, silver squeeze with the Wall Street apes and all that stuff had effect. But the real effect is the derivatives market. And the only thing backing up the derivatives market is commercial bars. And now, since the commercial bar market, that's what's driving the market. And that's how the derivatives market is based upon. So the answer is, as long as there's a tightness in the commercial bar market for both investment and industry, and that maintains, as long as that maintains, I think you'll see higher prices. If by some chance that supply can be overcome, demand wanes or supply increases or a combination thereof, I do think we could see the price come down and maybe, reestablish a new base. You got to remember, I don't know if you know this, Ben, but I've said only a few times, but when silver went from 6 to 50 in 1 year's time in 1979 to the blow off top in 1980, silver came back down and reestablished itself as a $20 per ounce average price for the entire year of 19. Well, think about that. If the high was $6 in 79 and the average price in 1980 was 20, not 50, not the intraday high, but the average price was triple what it had been a year before. And that's kind of what I see this time. And so I don't know the numbers. I'll give you the idea, but let's say we go to 300 and we back down to 100 and we basically have an average price of 100 for the year 2026. Those aren't my numbers, but that's the idea. So my point being is that anyone that's holding at this level, I think, I don't know, will probably be in the profit zone in nominal terms. I mean, somebody that bought silver in 1980 at 50, which is very rare, but there's maybe one or two or three out there. They really haven't made a gain in real terms. In nominal terms, of course, 60 is a bigger number than 50. We all know that. So that's where I take it. Markets have a tendency to reach equilibrium. And so there will be some point probably where equilibrium will be reached. So I'll make one more quick point. Graphene has the ability to do a lot of things that silver does, but it's pretty expensive, atom by atom. It's a nanotech. But as things progress, we might get into a situation where the economics of graphene actually are equal to or better than silver application. Technology can change the paradigm, but I don't see it coming very, very quick.
Right. Well, I appreciate that answer, David. And something that I'm curious to ask you is in the last year, gold has done extremely well again. And they usually say that gold moves first. And it obviously did that more than the last year. Silver, it seems like it's been catching up. Pretty much a year and a half ago, it was around $30. Now it actually just hit $60. So I'm curious to hear your thoughts on when does the acceleration phase happen where silver now starts to lead?
That's already happened, as you outlined. I mean, we had a gold silver ratio as high as 100 not that long ago. And it took a while to get below 80. I mean, it was hanging in the 80, 82, 85. And gold is running away. And people go, what's wrong with silver? And basically, it's kind of the natural course that you outlined. In the final phase, you usually see gold lead and silver catch up and overtake gold. So in other words, the gold silver ratio goes from that 100 to 80 to today, it's probably below 70 because I know silver's printed over 60 and the market's still live as we're doing the interview. And where will it get? I'm conservative. I think it'll get to 40. You know, could get to 30. It's been to 33, 30 to 33 for a very brief time in 2011. And I kind of expect it could do that again. Whether it gets cut in half from there, it goes to 16 to 1, the monetary ratio, close to what it did in 1980 intraday, could happen. I don't rule anything out. So believe me, I mean, it's humbled me many times, but I wouldn't bank on it. And I'll have to see how the market reacts. The market gives you some pretty good clues if you listen carefully and try not to get emotional. Not perfect, but certainly. And the idea too on getting out is where do you go? You know, if you want to sell your silver, what for? Excuse me, Ben, what for? Well, there's things, people want. I mean, a house or a business or paying off debt or starting a foundation and giving back or whatever it might be. But just to put it into fiat, I think would be a mistake, at least at this point. So you got to kind of think through what you want to do and scaling out. When silver hits X, I'm going to take 20% of my silver off the table. And silver hits 20% above X, I'm going to take off another 30% of what, and on it goes. So we talked about that in the book, Second Chance, that David Smith I wrote many years ago. You don't want to get too greedy, but I really do think triple digits is a possibility. And then if that happens, or maybe I should say when that happens, I'm on the hook because I have broadcast rather not very often, and I will have a party here in Spokane if silver makes it to 100. And the party's on me for a while. Transportation's on you, but you're invited, and I'll have to do RSVP because the place I'm planning to hold this event will only hold so many. So obviously it'll go to my paid members first. And then if it's not full, it'll go to the free membership list. And then if that's not full, I'll just open it up to the public until, it fills up and then away we go.
Right. No, I appreciate that answer, David. And what are other maybe factors that you think that are catalysts right now for not only silver, but even gold that you feel not enough people are talking about? There's a lot of really intelligent, brilliant analysts as well as investors that are speaking their truth about the metals. But what do you feel doesn't get talked about enough?
Well, I think it gets talked about enough, but not understood. I can be so bold. So if you go back to my early days and what I was, talking about, some might even say preaching, what I said was that all fiat fails and that gold and silver are the money of last resort of the ultimate. And I think that statement didn't really penetrate to what that means in the long run. And what it means is where we are now. My basis of that statement is that both gold and silver from the year 2000 onward, which is basically the beginning of this bull market. So big move, 11 years in a row, gold went higher and higher year over year. 2000 to 2011, you couldn't go wrong by owning gold. And then from 2011, we started to come down and we had this big consolidation, took a long time, and now we're back into new highs for both metals. In that time frame, most of the time until very recent, the commodities, they acted as commodities, not money. So they were trading above, sometimes below the cost of production. And that's what you see with wheat or soybean oil or cotton or cocoa or anything that's in the commodity sphere. But gold and silver are money, but they were traded as commodities. Now they're traded as money because the margins in gold are double, the margins in silver are double, and they're still going higher. Why? Because the psychology has changed. Well, maybe the psychology certainly hasn't changed for someone like me or someone that understands what I'm talking about. But I think the market, whether it realizes it or not, is valuing both these commodities as money, the ultimate money, the safe haven money, the money of last resort, the money that if I don't have it, my savings are going to deteriorate faster and faster. My pension isn't going to pay for what I thought it would. My savings is being depleted rapidly. All those factors that push gold and silver into new levels, paper-wise, but really value-wise, because near the top, I'm not that interested in what the paper price is. I'm more looking at value. An ounce of gold buys how much of an apartment building, how much of an automobile, how much housing, how much oil, how much cotton. I'm going to look at it on the basis of what does that ounce exchange for in the real world, basis the historic norm. And if it's the historic norm and it's equal to that fine men's suit, like we always talk about, but it buys 3 suits, not one, now I know the gold is overvalued. And that's how I'm going to measure it. Price happens to be $5,127, so be it. If it's $10,968, so be it. Or whatever number you want to choose. What I want to focus on is relative value. Is gold undervalued, which it still is? Is it fair valued equal to that fine men's suit, which it's been really for a while? So you could say it's fair valued in that parameter. And, that's the way I'm going to judge it. So I do, of course, look at the price. We all do. But I haven't got a price so much as I do what is the value structure acting as money as it has historically.
So, David, there's a common expression, gold is real money. When we think about silver, we think it's usually poor man's gold. You obviously spoke about the importance of why we should actually care, to own this of real value for people. More than ever today, when I look around in the everyday world, when I'm meeting people, I don't see everyone aware of what's going on. They might be aware of inflation or they might be aware of, government debt, but it seems to me that they're not fully aware of deeper issues that are going on. So a question I want to ask you is, what do you think are some very important issues right now that scare you that you wish more people to be educated about?
I think one of the best places to start is what's on the website now. We really simplified the website and made it even more user-friendly. And that is step 2 that we outlined. And that is step 1's get on our free email. Step 2 is to watch the documentary, The Four Horsemen, because that documentary, even though it's over a decade old, really goes through all the problems we are experiencing now and the reasons for them. And the basic outline of that is the end of the age of empire, how empires ebb and flow, how the Roman Empire was the most powerful and on, demise of the Roman Empire, and what to look for at the demise of the empire. And one of the things, of course, is a lot of mistrust, a lot of emphasis on food, a lot of emphasis on money or sound money, what works in the financial system, why the fake money starts to break down, and a very big discrepancy between the upper class and the citizen. So all those things are at the fore right now. And that film is not really take kind of a neutral position. In other words, it's mostly fact-based without getting into a left-right paradigm or a conservative liberal paradigm or a, this country's better than that paradigm or any of that. It just basically lays it out without attacking anyone. They don't even, really attack the bank. And so that would be number one, because, trying to tell a friend that's wants to know, and then you come up, not you, Ben, but, it's easier. I think it's just a buffer. Say, I watched this film. I really liked it. Could you watch it and give me your thoughts? But that way, you're kind of in a neutral place. And some people watch it, some won't. And then on that basis, I certainly didn't want to make a sequel to the Four Horsemen film. Ross is a far superior filmmaker than I am, and I'm not a filmmaker. I just produced it. But my film goes maybe a step beyond that, or that was the intent, to look at it from more of a spiritual perspective of why money has so much control over the world's population, the fear, control, and stress that money brings to most of us. And that's kind of a segue from the Four Horsemen film where, the end of empire is nigh, and here's what it looks like, to how stressed people are as we're getting very near the end, where marriages break up because of financial reasons. People have fights over an inheritance because, someone's getting the money split different than they want it to be. I mean, money can cause a lot of problems. And that's unfortunate. And really, one of the roots of it is, the love of money, which is really the issue as far as I'm concerned, but also the understanding of what money is, and realizing, which the market's now realizing, that those digits in your bank really aren't of value in the long run, or even in the short run, the way things are going. So what can I do about it? And that's the run to gold and the run to silver, which we're experiencing. And usually they go very high, very fast. And that's what's a concern of mine, because, is with what I do, people want me or expect me to be able to find, the top or near the top. And that's a very, very difficult task. And then, as I said earlier, but bears repeating, and is, okay, so I call the top, and silver's at $112, and that's it. 212. What do you do with it? You got to think kind of ahead, You want to put it back in the digital world and sit there and look at a big number, or, so anyway, we'll give it back to you, Ben.
Yeah, no, I appreciate that answer, David, and that resource as well. And I actually want to stay on resources, because I do feel education is super powerful. To have knowledge, then you have competence. And if you have competence, you hopefully then will have more confidence in your decision making. So I want to bring another documentary that you actually recently produced, which is Silver Sunrise. And I know you go even deeper of explaining how money manipulates our lives. There's a lot of things you unpacked it, about trust. So could you explain this to me as if you were speaking to a 5-year-old? I want to know more about what this documentary was about and what you were trying to communicate.
Yeah, okay. I'll give it a shot. So if I was saying a 5 or 6-year-old, I think I would ask them, I'd probably give them a leading. Say, do you think that money makes the world go round? And a 5-year-old probably would know something about money. I know I did at 5, not very much, but I know that, went to the store, we couldn't take anything out of the store unless my parents paid, money to get, the grocery cart filled up. Or if we went to, I was probably not that young, but, my dad bought a car, and that's a big event. You don't buy a car every year, or at least our family didn't, So I had a little bit of understanding of money. And, if you would ask me at that age, it was, yeah, money, without money, it seems like you don't have commerce, you don't interact with others for goods and services. Yeah, I think money is what makes the world go round. So once I established that, I'd say, how surprised would you be if actually money doesn't make the world go round? It's energy. And without energy, nothing happens. And in our current world, our current paradigm, that means oil for the most part. And without this raw energy that we have really only had for 125 years or thereabouts, rough numbers, more than 100, has given us this lifestyle that we all enjoy, where our lawnmower does what it would take, more human labor to do. That this energy that we're able to use has provided something. I don't remember the numbers, Ben. I should have got them ahead of time, but I know questions ahead of time. But like 1 barrel of oil is, I forget the number, but something 50,000 man hours of labor, or some huge number, some unbelievable. So if you buy that for $60 or whatever, and you're getting that much equivalent in hours of human labor, think of how cheap it really is. And it's been that way for a very long time, and that's given us the ability. So I would try to get that person to understand energy is really more important than money. Money's kind of an energy ticket. You get so much energy per, financial instrument. So the film is about the what if. It asks questions like, what if energy was free or very inexpensive? What would the world look like? And the answer is far different. I mean, just take a thought experiment in like the Sahara Desert. If we had free energy, you could, bring water into there and make it a lush, paradise of, agriculture. I mean, there's so many things you could do that are with energy that was abundant and readily available. And that would make a huge, huge difference in society. But if you think about it further, it deconstructs the entire paradigm, which is the control that the money masters have, which of course is printing money. I've said that almost every interview. But if you go deeper, it's really the oil cartel or the oil barons that run a great deal of the corporate structure of the world, because they know everyone needs, gasoline or diesel or aviation fuel to do anything. You can't really do anything. And until or if we go and, the green scream, it's a great idea. I love the idea of having energy that doesn't pollute and all that, but basically it's a lie. I mean, with my strong engineering background, the solar thing really is not that helpful. And even the wind power. I mean, what you want to look at is energy return on the energy investment. And the return on energy invested into some of these windmills is negative. They don't last as long as they were reported to last, so they don't produce a break even. So if you put in X amount of energy to make the windmill, put it in place and get it going, it's got to produce a lot of electricity equivalent to break even. In other words, if it took X energy to get it in and it takes 10 years to get X energy out, now you've just broken even. And now from that point forward, you're getting quote unquote free energy, but it does wear out eventually. And these things are wearing out, faster, and they have problems with those windmills. So I'm not against it. I'm just looking at it from a purely objective perspective, that this whole push is not what it's been sold as. And that's unfortunate, because many people believe that if they're driving an electric vehicle, they're helping the environment, when actually they're just exporting the pollution another area. But I've done a couple of talks about that, and I did one of my reports about how much battery metals we would need just to get the whole world on an electric vehicle. There's really not enough copper or lead or lithium that do it, at least not in a reasonable time.
Appreciate you explaining that, David. I feel like I understood. Okay.
Did my best.
David, a question I have though is, knowing all this information, could you talk to us more about the supply deficit when it comes to silver? Because I know we spoke about earlier where it's such a critical metal now in the world. It's even being announced that. Can you just walk us through that a little bit?
Yeah, well, we've been in a deficit before, and that deficit took place from 1990 to 2005. And we actually decreased the above ground silver supply from 2 billion ounces to 500 million ounces. So we ate up 1.5 billion ounces over that 15-year time frame, which you do the math in your head, that's 100 million ounces per year deficit on average. It wasn't every year the same amount, of course. And the market really didn't move that much, but the supply got so low that there was a huge impetus to get going and getting more silver in the year 2000 or thereabouts. And the deficit, I said, lasted 5 years later. But it was driven by, I think part of it was silver demand, but it was also China. I mean, China really went into their industrial age in the year 2000 or again thereabouts and just really built out. And that just got all the mining worldwide just really, really. So it went from like 500 million ounces being mined in the year 2000 or so to almost double that, rather quick. And of course, that brought a lot more silver. So we started going into surplus. So we were stockpiling silver above ground. And now we're back into a deficit situation. But the deficit's hitting the commercial bar market that we talked about earlier. And that's the real key to what drives the true silver price. And because of that, as I said, I think it'll continue until it actually stops. And when is that? Well, probably when we get enough mining. But that's a factor that takes years. I mean, 5 at a minimum, and probably more like 10 these days because of more red tape. Now, the U.S. is kind of mitigating some of that problem, but other jurisdictions, you face regulations and that type of thing. So, and there aren't that many large silver deposits left. There's one in our report that just refinanced, so it's diluted to shareholders. I still think it's worth holding the stock, but there are not very many well-known huge silver deposits available. So even if we could bring them online quicker than the standard 5 to maybe even 10 years, not sure it would make up the deficit. But we don't know. As I said, to be fair and try to be a broad or open-minded thinker, graphene could play a part. There could be something out there that you and I do not know about right now, Ben, that 6 months from now comes up and it say this does what silver does and it's cheap. I can't imagine that, but I wouldn't rule it out entirely.
I appreciate that, David. I know you were saying earlier on that we are in an acceleration phase for the precious metals. And, when I step back and I look at, okay, central bank buying for gold and institutions too getting so involved now, that's a good sign. But a question I have for you is when will we see retail interest? When will we see more people actually listen to what the market is saying and then apply it to their investment decisions?
Yeah, that's a great question. Well, what we've seen is early adopter retail interest for years. I mean, going from, again, 2000, 2011, when gold went up every year and silver went up almost every year. There were years that year over year, silver was down from the previous year, but slightly. But generally, they both trended together. And a lot of people participated in that. And then, it got to the top, and I called that top, by the way. They just left the market or held too long or got discouraged or whatever. And that's normal market activity. And right now, many people have waited a long time to see a profit in silver or to break even in silver are now seeing that. And they're giving up or they're selling part or all for various reasons. Some need to sell for whatever reasons. Some selling just because it's a psychological relief. Oh man, I bought it at 30. Finally got to 35. I'm out, and now I don't have to think about silver anymore. And now, of course, it's pushing 60. And then, oh man, why did I sell at 35? But that again is normal market activity. So when will the public come back in? And I think it'll come back in when it's fear driven. I think when, maybe there's a silver default or there's a bank failure or there's a derivative product in the metals, or maybe somewhere else, could be in the banking system, or perhaps it'd be a one-off like a cyber attack from foreign power. The more probable is a congestion in the silver and or gold market or some financial makeshift. It didn't happen too long ago with this power outage in the exchange on the COMEX, which is questionable whether that's exactly what took place or not. I'm not going to go further down that rabbit hole. But those type of things that really make people question. And so I think some people that sold at 40 may be buying them back at 60, or people that don't think it can ever get higher than it is, throw in the towel and buy it at 80 or wherever it's. So it will be based on fear. It'll be based somewhat on greed. It'll be based on a manic fear of missing out. My dollar is going to become worthless. My pension isn't going to be there. Social Security is going to fail. The bond market's crashing. All these things that can mount up, and some will go hand in hand. In other words, you could have a bank failure and a cyber attack that killed the bank, or whatever it is. I'm not trying to be a prophet of doom. Believe me, I'm not. All I'm suggesting is that a lot of that drive to buy it is driven on fear, which is false expectations appearing real. The false idea that the bank will fail, the false idea that we'll have an EMP, the false idea that, there'll be a shortage in silver that's manifested for all to see. So the idea will drive it more than the actual event. If an event does happen, obviously that'll be a motive. But it could be no event takes place, but the idea, the fear of an event take place, meaning that fear drives more and more people into depression.
I appreciate that explanation on fear. Fear definitely always drives psychology of investors or even just people in everyday life. But David, something that I want to shift to next is I feel like history teaches us a lot. And when I look at the difference between you and I, you got some gray hairs, which means you got a lot of experience on me. You've actually lived through cycles where there's been bull runs, where there's been bear markets. On my end, I got a lot of hair and I'm a millennial and I'm a lot younger than you. And no matter who is listening right now, whether they're Gen Z, whether they're millennial, whether they're Generation X, or whether they're a baby boomer like you, they're probably more curious right now of knowing how to navigate this bull market that we're in right now for precious metals. And lots of times they're always asking those quick answer questions, which inning are we in, or what is David Morgan doing? But if we could just start with, if you could give some examples of history where there was bull markets that were maybe not the same, because it's never exactly the same, but similar. And what were some lessons that you learned then that you probably wish you knew at the time, but now that you know now, so you could actually properly handle this bull market?
Yeah, it's a tough one, and I'll give you the benefit of my experience. Number one would be not to be fearful of buying at a new high. But with that idea of buying at a new high, also buy the right amount. And that is if we have further deterioration in the money system, which I believe we will. You don't need to pull everything out of your savings account and move it to depression. The best approach is a grounded approach, which means to buy over time and buy what's suitable for you, which in most cases is 10%. So if you've got 10,000 in savings, you want to shoot for 1,000, maybe 2 at the most in metals. And if you bought it all at 60 and the market moves down to 50, you're going to be upset. But if you set that 2,000 over a 10-month period and put in 200 per month on the first of the month over the next 10 months, you put in your 2,000 and it's at 60, you're buying less. And if it drops to 50, you're buying more. And if it goes to 70, you're buying less. Dollar cost average is the best form of discipline. It teaches you to put fiat into money. It teaches that I made a commitment to myself. I'm going to adhere to that discipline. I'm going to buy regardless of the price, because in the long run, in an uptrend market, my average price will be better and better. If I go back to that 11-year bull market, you could have bought it from 2000 and been early. You could have bought it in 2001 and been early, but you could have waited to 2005 thinking, oh man, it's moved so much, but I'll buy it. 2006, you were happy. You could have bought it in 2006 and 2007, you're happy. Now, I do not see this market going 11 years. Now, a lot of my peer group does. I don't. I think we're getting into the acceleration phase, which means just that. It accelerates to a high point, and then some paradigm shift happens, like a new monetary system with like a CBDC, and it's the end of the current system. Now, whether or not that takes place or in the time frame I'm suggesting, it's to be determined. So I think that's the best advice. Don't feel like you missed the boat and you've got to put everything in. Say, look, David's been consistent from day one, basically. He said, pretty much 10, 20% the whole time. So there's no need to go beyond that. And in a market that's this frothy, you could get caught being on the wrong side, especially if you use leverage, which I would request no one to do so. But, some people are comfortable. So I'm free market. You want to do it. And just get in. Just get in now, but you don't have to put everything in now. Put in, like I said, 1/10 of what you want and do it over 10 months or a year.
I appreciate that answer, David, because I feel lots of times, retail investors confuse a bull market with brains. They think they're a genius, and they also sometimes forget it's so important to remember, as much as there's some nice gains and takeoffs, there's also going to be some declines as well. That's part of the process. So I appreciate you explaining about average costing and understanding why they're even being consistent with their investments, and also being cautious with how much they're buying and not being irresponsible. David, I want to shift more about big picture of financial education. I know you love to educate. Probably the first time I ever discovered your work, I really felt a feel of education. When the everyday person is thinking about, in terms of, inflation right now, or government debt, or even before you were even just speaking about maybe a potential financial collapse, there's even 350 trillion of debt, in terms of global debt across the world. I'm curious, if you were able to walk me through how you would guide someone about financial education, why it's important, and how that could translate to them becoming more financially literate.
Yeah, I think obviously the American school system doesn't teach very much about finance. I mean, you're never taught how to balance a checkbook when you're in high school. I think that would be basic. It's pretty easy to learn on your own, but nonetheless, why not talk about money and its origin and what it is and why it's important? All of those things, but you really don't get that. I think the number one best lesson to learn is self-responsibility around money, which means living within your means for the most part. It's very easy to access credit in our system, and it's built on credit. But credit is putting you into a debt-based system, which it's based upon, and now you can borrow ahead from your future and pay off a debt over time. And I'm not against it in altogether, because let's face it, how do you buy a house? I mean, most people would save most of their lives to buy a modest house. So you get a mortgage and you pay it, month to month. I'm not against that at all. Or an automobile, I mean, especially when you're getting started, you're out of school, you broke, either high school or college or even a master's. I mean, most people in those circumstances are starting out, I mean, you're a millennial. I have 2 millennial daughters. I know how they started and where they are now. And so I think self-responsibility, say, look, I make this much, I'm going to live within my means. If you learn to do that from an early age, at least for my personal experience, it stuck with. So as my my finances improved, so did, my location or whatever. but not pushing it, not, well, I can barely afford this mortgage. I've got to have that big a house or whatever. I just never had that mindset. I want to be more comfortable. I can afford this and not have to stress about it. So I think that would be the number one lesson, is to live within your means. The second lesson is why saving is important. I think the discipline of having savings is paying yourself first. The Richest Man in Babylon is a book that's recommended for a lot of people to read. Talks about paying yourself 10% of what you do. And if you pay that 10% to yourself on a regular basis, especially if you put it into silver or gold, as I have recommended, then that dollar cost averaging over the last 25 years, you'd be looking pretty good right now. And you wouldn't have had all that stress. Oh, crap, I bought silver at 30. David said it'd probably hold 30. It didn't. It went all the way down to whatever, at 12. I think I bought some in the 2020 crash. But had you just said, every 6 months, I'm buying $1,000 worth of silver. And, here it is 25 years later, you'd be looking today like, God, it actually works. Now, there'll be people that criticize that, and I get it. And they have every right to, because a lot of this stuff depends on where you put the starting. If I put the starting line at 50 in 1980 at that intraday top, right now at 60, you would be upset if you put everything you had in silver and never added to it on the way down. But that's not what I teach. I teach to, start a savings plan and save in real money, and just do that on a regular basis. And don't think about it. Just maintain that discipline. Now, if something happens, the car breaks down, or, kids get ill or whatever, well, at least you got that savings to go on, grab it, and do what you need to do. I mean, life's on life turns. It happens. I mean, some of us, things unexpectedly happen, but the discipline of savings. So live within your means, discipline yourself to save. And then I think also giving back. I really think that the universe reflects, you get what you give. So I think if you're willing to help others, it doesn't have to be monetarily, although it can, but just that goodwill toward others. We're all human. We all want to be appreciated. I don't know why it is, or maybe I pay more attention, but I get the word sir often. I don't know if I have a beard or what. Sir, you don't have to call me sir, but anyway. But I just really think we can make it way too. And also maybe leaning toward the minimalist thing. Do I want this or do I need this? I want the shiny new car, but if I buy that same model that's 3 years old, I'm going to save 12 grand. That's $1,000 a month increase in my cash flow. Maybe I'll take that 3-year-old and be happy. Because once you drive it off the lot, you're losing money, and it only stays shiny for so long. And so I think those three things are, I want to go into 12, but I think those three are probably.
I appreciate those lessons there, David, because I feel sometimes our society nowadays always gets caught up comparing to others, feeling imposter syndrome. And I love that you broke down that the first thing that we need to do is even save, right? You can't even think about investing until you take care of your own debt and you have that personal sovereignty. So I really appreciate you, really giving some wisdom there. And something that makes me think is I get approached a lot now by Gen Zs, and they're hungry for knowledge. They're hungry to learn. They see me as a mentor to them, like the way I see you as a mentor to me. And they're often asking like, hey, sir, like, how do you build generational wealth? And I feel like we are living in a time right now where, some of the things that we've spoken about, where there really is a generational wealth opportunity for many people to take advantage of. But if you were to answer that question for someone that is young, a Gen Z, who has less responsibilities of a house or a car or certain things like that, but they've already saved the money and they're now curious about how to create their own generational wealth, what would you say to them?
That's been pretty well documented. So it's really not coming from me. It's coming from others. But, legacy wealth, generational wealth comes really in three forms. It's It's gold or precious metals. I include silver, but gold, land, and fine art. So those three things basically hold value no matter what the political environment is or what the money de jour is. So land is where all wealth begins, basically something under the ground that you dig out like gold or lithium, and something above the ground like trees that you turn into lumber and build a house, or gravel to make concrete or whatever. So land is really probably number one above gold. So by having real estate at some point in your life, fully paid for if you can, and then it can be just raw land, but of course improved property like a house or an apartment or a warehouse or a barn or whatever. So those are the three. It's that simple. Now, fine art, I know nothing about, and that's kind of for the ultra wealthy. Legacy wealth, the very, very elite, would have a Rembrandt or a Monet or whatever that they paid 1.2 million for, and then 10 years later it's worth 2.4 million or whatever. That's outside of my domain. I do know it works. I do know it's true. It's probably not germane to our discussion, but the other two are land and precious metals. So that's it. There may be something else that comes about in the future, but I can't really think of it. It would be, the 4 or 5,000 year history of the precious metal. It'd be the forever, land idea of raw land or improved land. And then fine art really wouldn't have come later, actually. It would be the third thing that manifested as legacy wealth.
Appreciate that explanation, David. But sometimes I also get another question following up from that, where people ask, yeah, but what about Bitcoin? Or what about, if you look in the last decade, tech stocks have done well. What about those opportunities within investments? What would you say to that?
I'd say there's always opportunity. So there's, we haven't really touched on the stock market, but, there's always ideas, even in a depression, that are worth investing. I mean, one of the big scores, if you want to call scores, that we made as a family was in the cellular phone business. I mean, my dad and I caught the idea of cell phones would change the dynamics of the world sometime in the future. And, when we first started very early, when the cell phone was as big as, they were like this big, in these big bags, the original ones. You probably never saw one, but my dad had one. And, my mom was like, well, who'd want to have a phone, interrupt your privacy? It was like, you guys are nuts, cell phones aren't going to catch on. Of course they have. So I'm just using that illustration, a personal one, that there are opportunities out there and they're always available. As far as the cryptocurrency, obviously, if you got into Bitcoin at an early stage, you're very, very happy. I'm not a real fanatic for Bitcoin. In fact, I'm sort of neutral and negative on it. I did a series called The Crypto Conspiracy that's on the website for free. If you go to the blog tab on themorganreport.com, hit the blog tab in the search engine, type in Crypto Conspiracy. There's 30 podcasts looking at the other side of the coin. And that is how it started, who was connected to it. Was it a psychological operation to move funds that might have gone into gold and silver into another realm? Lots of questions are asked about that. But, a profit's a profit. I mean, if you got into Bitcoin at $100 and you rode it all the way to 100,000, good for you. As far as me getting into it at this point, I won't. The reason I won't is it's basically reversed the original white. It's become the opposite of everything it was proposed to be. Anonymous, free market, peer-to-peer transactions that will be quick, very little friction, very little commission to some entity, and really solved a problem that was outside of the banking system. Now the banking system has basically controlled it. It's not anonymous. Everything that can be tracked and traced. And there's been so many scams in the crypto world that it's disheartening, to say the least. I have a friend here that bought Ether at a very low, much lower price than it is today. And her 13,000 is worth, I forget the exact number, like $250,000. Well, she just got with one of my crypto friends that knows much more than I. And it's a scam. She put in the money, but she they might have bought Ether, they might not have. But the point is she can't get her money. And she's not the only one. I'm not, but I'm free market. I mean, if you really believe in it, go for it. I just look at it as unproven longer term. Bitcoin's been around for what, 28 years or thereabouts now, 2009. Anyway, so I'll just stay neutral. I was involved with a asset backed crypto, and that turned out to be a fraud. And that was very much disheartening. Maybe made me a bit bitter. Put a lot of time, energy, and my own money into this project that was, I think, the way forward for the blockchain, where it is asset backed and you have actual, real estate or cobalt or silver or water or whatever behind the token, actually true collateral rather than a string of, numbers and digits. But it failed. And of course, the people that started are not going to admit fraud and, maybe sue me for implying. But, and there was money spent to develop the project. There's little doubt of it, but the funds aren't there. And there were a lot more funds driven into the project than were actually spent. So where did that money go? It's a sad case. So that might have altered my look at it, but I'm trying to be objective, Ben. And I don't want to say the last thing. I think it's important. I do really think that the blockchain world is the advancement of the next monetary system. I think there's very little doubt about it. We will see the next system based on some type of crypto, central bank digital currency, or a digital currency from a private enterprise or private banking system. I really do think that is the future. So I can't be against the basic premise of what the blockchain is able to accomplish. But as far as a lot of these cryptos, I wouldn't touch them. I don't think they have any true value.
I appreciate you speaking your truth. And it seems there's always a tug of war, right, between gold and Bitcoin and lots of voices and perspectives. And I'm just curious to ask you, if we could just stay there for a moment, is there's also been some pros I see on both sides of education of both gold bugs and Bitcoin bugs, if we want to call them that, where they've seen more the truth of the financial system. What are your thoughts on that in terms of the things that they share in common in terms of the financial world?
Yeah, there's a lot of guys that are, pro Bitcoin and gold, pro precious metals and Bitcoin, or pro crypto and precious metals. And, again, I'm a free market thinker. I mean, so the basic premise is the most important. Something is wrong with the current financial system. Is there a way to mitigate it? And that's what happens at the end of the age of empires. People start to see the problem, understand the problem, and do something about it, whether it's buying gold or making up their own Ithaca dollars. You can look it up on the web. I mean, there was bigots in Northeast, but communities in the Depression made up their own currency, made up their own. You can make a monetary system based on a fiction, like a piece of paper, as long as it's a contract everybody agrees to and adheres to. So you can make up your own monetary system in a community. Usually a smaller one that works a lot better, but there's lots of ways to mitigate the problem other than some officialdom telling you this is what you have to use, and you can't do any commerce without it, which is the direction we're going with the CBDC type of environment, where every transaction is traced, tracked, and talked about. Could be.
I appreciate that answer, David. And, as everyone's wealth is important, they've worked hard to save, they've worked hard, to preserve capital. They're trying to think smarter of how to invest their money. Curious to ask you, like, if there was a financial collapse, do you feel like one is coming? Do you feel like there could be a black swan event? I'm not asking you to predict. I'm just curious to get your thoughts.
Yeah, I think financial collapse is inevitable, but I think most people get a emotional attachment to the word collapse.
Mm.
And the word collapse is like, everything burns to the ground and there's smoldering ashes everywhere. And, the place has been nuked as a metaphor. And that is not what happened. In a financial collapse, what happens is all the wealth stays in place. All the schools, all the factories, all the roads, all the churches, all the grocery stores, all the automobiles, all the houses, all the stuff's still there. And that's real wealth. So what happens? They don't trust that dollar being worth anything. So things get repriced. They get repriced either in terms of barter, which is not the best system. The best system is in real money, so it gets repriced in terms of gold or silver. That's the most likely. Or it could be repriced in terms of a new system where we start over again. We wash the debt away and we say, okay, we now have the Amero unit for the Western Hemisphere, and it buys this amount. And people set a price on their goods and services under a trackable, traceable, taxable, blockchain-based system. And again, I think that's where we're going. I don't think this dollar is going to zero. I don't think we'll get to the complete new system overnight. I think it'll be an iteration where they go kind of side by side. There'll still be cash in the system. And then over a short period of time, like a year or two, it'll be a cashless system. And it'll be quote unquote voluntary, but it'll be almost impossible to do anything without it. So almost everyone will quote unquote volunteer to be in the new system. And that's kind of the repeat of history. You go from a sound monetary system to an unsound one, back to a sound one, to an unsound one. Only this time we could go from an unsound system to a further unsound system. Or perhaps, and many of my peer group think, we would tie the new system to gold or silver, mostly gold, or some asset class like land or oil or whatever. So, but I don't see the financial collapse not occurring at some point. The debt cannot be paid back. Everyone knows the bond market, which is the credit system, which holds up the entire system on a global basis, is losing trust rapidly. And once that happens, it's very difficult to regain. So the game has to be regenerated at some point. And we're getting closer to that all the time.
I appreciate that explanation, David. And something that I really want to ask you right now, in the past, I've asked about people that you've learned from. I always really think it's important to have a tribe of mentors, always continuing to learn, cover our blind spots. I'm curious to know, if you were to think of some of your mentors that have impacted the way that you think today, who would they be?
Well, the first shout out, as we say in the vernacular, would be the financial newsletter writer industry. I was pretty well influenced by many in the 70s. Howard Ruff was my favorite, but he was pretty popular back then. Jim Dines, James Sibbett, Jim Sinclair, Richard Russell, for sure. Richard probably being near the top. But outside of that, I would say the Mises School is probably the most important. I think anyone should read, What the Government Has Done to Our Money by Murray Rothbard. And anything that Murray Rothbard has written or spoken about, I think you should take to heart. You don't have to agree with it, but you certainly, if you're open-minded, listen to both sides. I try to listen to the left and the right all the time. I don't try to be focused on my side's right and the other side's wrong. I'm not a right-wrong kind of a thinker. I think more broadly. What can I learn from both sides? But so that would be it. I would say if you're going to do one thing, get on the Mises Institute website, Mises, MISES.org, and get on their daily mailing and just read that, 5-10 minutes every day and become educated on the way the real world works, because the way the money system works isn't really based on the financial system that we have. It's breaking down. It works on human interaction, and human interaction in a free market does the best, which is basically a free market theory, which is proven to work better than anything else. Not that mistakes don't happen, but they're mitigated in a true free market more efficiently than any other way to do it. Certainly by government intervention, where you're not allowed to fail. Government will bail you out if you're a failure. Well, that's not what we teach our kids. If you fail at something, you either got to go back and relearn it or move on. But that's not how society has set it up.
I appreciate that answer, David. If this was your last interview today, what would you want to share with the world that you haven't shared yet, David?
I think the main thing is authenticity. I think that we have been taught that the way to success lies outside of yourself. Success is based upon your bank account, or how much gold you save, or what kind of car you drive, or what kind of house you live in, or where you eat out, or what kind of social club you belong to, or what kind of clothing you wear, or if you have a watch. And all those things are outside of yourself. You can take none of that with you. And what you can take with you is your memories. What did you do to help someone else along the way? And I would say that is the inside job. And that's what I try to convey in the silversunrise.tv documentary that you've watched part of, is that the interior thing is really the most valuable, what you are as a human being, not what you have externally, but what integrity you have, what joy you can bring, what you can bring to contribute to society, not necessarily monetarily, although it could, but just maybe by your presence or your understanding or your willingness to help. And those things I think have been distorted because we've been focused more and more on the social memes that we have on Instagram, TikTok, and all these things. And there's some good stuff on there, I think. But overall, this almost self-obsession, this narcissistic, look what I have, or look where I'm eating, or look at what I'm eating, or all this pretty much very insignificant in the long term idea of this is what makes me happy, when really happiness is an insight. And I'll give you a real quick example. I did this in Anarchapulco years ago. I know this is going to be a very long interview, but so I've been in a lot of self-improvement things. I've read a lot of books, done lectures, gone to different seminars, webinars, you name it. And one of the most valuable ones I ever did was one that many of the Canadians are familiar with, and maybe Americans as well, from T. Harv Eker. And it was one of the programs where the mission for that day was to climb to the top of the mountain and build a structure. And the first team that built the structure at the top of the mountain won the prize, whatever the prize was. And it was 4 tribes, and it were divided pretty equally. In other words, with a bunch of young 20-year-old guys in one group, a bunch of 60-year-old group guys in the other. So it'd be, pretty much equal amounts of men and women, old, middle-aged, and young in each group. So they pretty much equally divided. And we started out with these blocks and timbers and a water bucket and twine or something. And it was a long hike. It was like 3-hour, maybe 4-hour hike from the base to the top. Top was kind of a flat mountaintop. And I was, much younger, not probably my late 40s, whatever. So I helped carry the bricks, and I helped carry the lumber, and I helped carry the water bucket. And, we weren't having the women do that. Some wanted to, some did. Anyway, so we're getting near the end of the game, and I see that another group has got up there. Now, you don't have to have all the group there. You just have to have enough to get all the materials there and put up this lean-to. It wasn't a real complicated structure. You just had to get all the blocks and the wood, put it up. Whoever did that first wins. Didn't have to be the entire group. So I'm near the top, and I get up to the top, and I see another group is already putting up their stuff, and we haven't even gotten a piece of lumber up. So I go, well, what can I do? I'm here by myself. I can't do anything. So I went back down the mountain, somewhat, not very far, and I started helping members of my group up, grab them by the hand and kind of pulled them. I pushed a lady up there, and we got, I don't know, 5 members out of probably 25 to the top. The other group had finished. The leaders of the team, of the whole facility, said, okay, game over, group day, this group won. And, everybody go back down the hill and we'll meet in the morning. So everyone leaves the top of the mountain, and I'm alone at the top of the mountain by choice. I just stayed there for a minute. And I just started crying crazy. I couldn't stop it because that was one of the most powerful lessons I've learned. And I didn't know it until I did this exercise. And what I learned that day was that making it to the top of the mountain wasn't very important. Helping others make it to the top, that's what was important.
That's beautiful, David. Thanks for sharing that story. I think it speaks beyond words right now that I can even think of, but showcases how human you are and connected you are on a spiritual level to yourself. I always find like, even when people ask me, they're like, oh, who do you want to interview again or bring on your show? And I'm like, at the end of the day, I don't care about people's titles or financial success or, if they went to the Olympics. I care about who they truly are beneath those layers. So I appreciate you sharing that story and just sharing more of who you are, David. And, I want to take this last little bit of time to not just thank you for being here today, but also thank you for being part of my journey, of educating me and believing in me and kind of what I'm building with this podcast. It started off for self-learning, but then beyond that, it was more like, yeah, I want to share this because I also want to lift other people up too. So thanks again, David, for being here today. It means a lot.
That means a lot to me, and thank you. And appreciate you. I'll wish every one of your viewers a very happy holiday and a prosperous new year. And remember, we are more important than money ever will.
I agree. Thanks, David.
Okay.